Welcome to our comprehensive guide on wealth-building assets. In this video, we will explore 8 different types of assets that have the potential to significantly increase your wealth. Each asset has its unique characteristics and benefits. Get ready to discover the key to a diversified portfolio as we unveil the secrets to building wealth. Stay tuned as we delve into each asset, unlocking the path to financial success one by one. First on our list is blue-chip stocks. Now you might be wondering, what on earth are blue-chip stocks? Well, in the simplest of terms, blue-chip stocks are shares in large, nationally recognized and financially sound companies that have a history of reliable performance. Think of the titans of industry, the companies that have been around for decades and have weathered economic storms. Companies like IBM, Johnson & Johnson, or Procter & Gamble. They're the sort of companies that make products you use every day, and they're not going anywhere anytime soon. But why are blue-chip stocks considered a good investment? There are a few reasons. First, they tend to be stable and reliable. They're not as volatile as smaller, less established companies. They're less likely to go bankrupt or get caught up in financial scandals. They're the steady, reliable tortoise in the race, not the unpredictable hare. Second, blue-chip stocks often pay dividends. A dividend is a payment made by a corporation to its shareholders, usually in the form of cash or additional shares. It's a way for companies to distribute a portion of their earnings back to their shareholders. And while the amount of these dividends can vary, they can provide a steady stream of income in addition to any profits made from selling the stock at a higher price. Finally, blue-chip stocks can contribute to wealth generation over the long term. While they might not offer the explosive growth potential of some riskier investments, their steady and reliable growth can compound over time. Think of a snowball rolling down a hill, slowly but surely growing larger and larger. That's the power of blue-chip stocks. So if you're looking for a stable and reliable asset to add to your portfolio, consider blue-chip stocks. Next up, we have index funds. Now you might be wondering, what exactly is an index fund? Picture it as a financial basket, holding a little bit of everything from a specified market. An index fund is a type of mutual fund or exchange-traded fund that aims to replicate the performance of a specific financial market index. It's like placing a bet on the entire market rather than trying to pick the winning stocks. Why are index funds so popular? Well, they come with a number of benefits. First off, they offer broad market exposure. Instead of putting all your eggs in one or two baskets, you're spreading your investment across hundreds or even thousands of different stocks or bonds. This diversification reduces the risk of losing your investment if a single company underperforms. Second, index funds are known for their low costs. Since these funds simply follow a market index, they don't require a team of analysts to pick and choose investments. This passive management style keeps the operating expenses low, leaving more of your money to grow over time. Third, they offer simplicity. If you're new to investing, or if you simply don't have the time or desire to research individual investments, index funds could be a great choice. You buy one fund, and you're instantly invested in a wide range of companies. But perhaps the most compelling reason to consider index funds is their potential for long-term wealth accumulation. While the stock market has its ups and downs, over the long haul, it has historically trended upward. By investing in an index fund, you're essentially betting on the overall success of the market. It's a strategy that requires patience, but it can pay off handsomely over time. So whether you're a seasoned investor or just getting started, index funds are worth considering. Our third asset is digital assets. Now, you might ask, what in the world are digital assets? Well, let's demystify this term. Digital assets are any text or media that are formatted into a binary source and include the right to use it. They are data that take on a digital persona. This includes everything from your holiday photos saved in the cloud to cryptocurrencies like Bitcoin and Ethereum. What's unique about digital assets is that they're entirely intangible. You can't touch or hold them physically, yet they hold significant value. And it's this very characteristic that makes them a fascinating and potentially lucrative asset. The most well-known type of digital assets, cryptocurrencies, have been making headlines left and right. Cryptocurrencies are decentralized digital currencies that use cryptography for security. They're not regulated by any central authority, which is a key aspect of their appeal. The potential for high returns from cryptocurrencies is enormous. Take Bitcoin, for instance. In the course of a decade, it has gone from being virtually worthless to being worth tens of thousands of dollars per coin. But remember, along with high rewards come high risks. The value of digital assets can fluctuate wildly, making them a relatively volatile investment. This is why careful research and understanding are crucial when investing in this type of assets. It's important to understand the technology behind them, the problem they're solving, and the team behind the project. It's also important to consider your own risk tolerance. Are you okay with the roller coaster ride that can come with investing in digital assets? This type of investment isn't for the faint-hearted, but for those who are tech-savvy, willing to do their homework, and comfortable with a certain level of risk. They present an exciting opportunity to be part of a new age of digital currency and technology. Fourth on our list, real estate. Let's dive into the world of properties, lands, and buildings. Real estate is an asset class that has stood the test of time. Its value lies in its scarcity. They're not making any more land. This inherent scarcity, coupled with an ever-growing population, drives the value of real estate up over the long term. Now, you may be thinking that real estate is out of your reach. But today, there are more ways than ever to get involved in property investment. You could become a landlord, or if that's not your cup of tea, you could consider a real estate investment trust, also known as a REIT. This is a company that owns, operates, or finances income-generating real estate, allowing you to invest in portfolios of properties without having to buy or manage them yourself. One of the most appealing aspects of real estate investment is the potential for passive income. Whether that's through rental income or capital appreciation, real estate can provide a steady cash flow. And let's not forget that it's a tangible asset, something you can see, touch, and use. But don't let the glamour of property investment blind you to the risks. Real estate is not a guaranteed moneymaker. It requires careful research, due diligence, and sometimes a fair bit of patience. Market conditions can fluctuate, affecting property values. And being a landlord is not always a walk in the park. It comes with its fair share of responsibilities and potential headaches. However, for those willing to do their homework and take calculated risks, real estate can be a powerful tool in wealth generation. It's a way to diversify your investment portfolio, hedge against inflation, and build long-term wealth. So, whether you're looking to buy a duplex and rent it out, flip houses, or invest in commercial properties or REITs, real estate offers a multitude of opportunities for the savvy investor. Our fifth asset is bonds. Bonds, ladies and gentlemen, are a fascinating form of investment. They are essentially a loan that you extend to a corporation, a government, or a municipality. In return, these entities promise to pay you back the principal amount, along with interest over a specified period of time. They are like IOUs with a twist, where you play the bank, and the entity plays the borrower. Now you might wonder why bonds are considered a good investment. Well, first off, they offer a predictable income stream. When you purchase a bond, you know exactly how much money you'll receive and when you'll receive it. This predictability makes bonds an excellent choice for those seeking a steady inflow of cash, such as retirees. Secondly, bonds are generally less volatile than stocks. While they may not offer the potential for sky-high returns like some other asset classes, they provide a level of stability that is comforting to many investors. This stability can be especially beneficial during times of economic uncertainty, when stock markets may be fluctuating wildly. Lastly, bonds play a crucial role in a balanced investment portfolio. Having a mix of different types of investments can help to spread risk and potentially improve returns. Bonds can balance out the riskier elements of a portfolio, such as stocks or commodities. They provide a counterweight, helping to smooth out the ups and downs of the market. However, like any investment, bonds come with their own set of risks. The issuer could default, interest rates could rise, and inflation could eat into your returns. But by understanding these risks and carefully selecting your bonds, you can go a long way in mitigating them. Next, we have online businesses. In the age of technology and connectivity, online businesses have soared in popularity, showing the potential for high returns and offering an accessible entry point for budding entrepreneurs. The rise of online businesses is truly a marvel of our digital age. It's an era where you can buy a pair of shoes from Italy while sitting in a cafe in New York, or sell handmade jewelry to a customer in Tokyo from your home in London. The internet has broken down geographical boundaries, creating a global marketplace that's open 24 hours a day, 7 days a week. What's exciting about online businesses is the potential for high returns. With low overheads and the ability to scale rapidly, online businesses can become profitable quicker than traditional brick-and-mortar stores. Moreover, The digital landscape provides countless opportunities for innovation, making it a fertile ground for those with a creative mind and a knack for spotting trends. But like any other venture, success in the online business world doesn't come without its challenges. The competition is fierce, and the landscape is constantly shifting. Therefore, choosing the right business is crucial. It's not just about spotting a gap in the market, it's about understanding the market itself, knowing your audience, and having a clear vision of how to deliver value. Whether it's an e-commerce store, a blog monetized through affiliate marketing, a digital course, or a subscription service, the possibilities are almost limitless. But the key to success is to start with a solid business plan, be adaptable, and most importantly, provide value to your customers. After all, in the digital world, customer experience is king. In conclusion, online businesses present an excellent opportunity for those willing to navigate the complexities of the digital landscape. It's a dynamic, fast-paced world, but for those who can master it, the rewards can be substantial. So whether you're a seasoned entrepreneur or a newbie, don't overlook the potential of online businesses. Online businesses, a modern way to build significant wealth. Our seventh asset is gold. Often referred to as the currency of last resort, gold has been a symbol of wealth and a store of value for centuries. But why is this shiny, malleable metal so coveted? Let's delve into the golden allure. Gold is considered a safe haven asset. This term may sound like financial jargon, but its meaning is quite straightforward. In the financial world, a safe haven is something that retains or increases in value during market turbulence. When the economic outlook is uncertain or when inflation is on the horizon, investors often flock to gold. Why does gold shine so brightly in times of economic uncertainty? The reason is gold's intrinsic value. Unlike paper currency or digital assets, gold cannot be created out of thin air. Its supply is limited, and extracting it is a costly and labor-intensive process. This finite supply and inherent value make gold a reliable hedge against inflation and currency devaluation. Investing in gold can take various forms, from buying physical gold in the form of bullion or coins, to investing in gold mining stocks, ETFs, or mutual funds. Each method comes with its own set of advantages and potential drawbacks, but they all offer exposure to this precious metal's value. Gold also has a unique quality of being counter-cyclical. When stocks and other assets are in decline, gold often performs well. This makes it an excellent tool for diversification, helping to balance out risks and potentially smooth out returns in a well-rounded investment portfolio. Moreover, gold has a long history of appreciating over the long term. While its price can be volatile in the short term, over decades, gold has consistently maintained its purchasing power, protecting wealth from the eroding effects of inflation. So, whether you're looking for a hedge against economic uncertainty, a tool for diversification, or simply a time-tested store of value, gold could be a glittering addition to your asset portfolio. Gold, the timeless asset for preserving and growing wealth. Last but not least, gas and oil. Often considered the lifeblood of the global economy, gas and oil play a pivotal role in shaping financial landscapes. These energy assets provide power to industries, fuel to transportation, and heat to homes. Indeed, their omnipresence in our daily lives is a testament to their value. But their significance extends beyond utility. The gas and oil sector presents a lucrative investment opportunity for those willing to navigate its complexities. It's a high-stakes game of supply and demand, geopolitical influences, and technological advancements, where the rewards can be as substantial as the risks. Take the oil industry, for instance. It's a vast and intricate network spanning exploration, extraction, refining, transporting, and selling. Each segment of this chain offers unique investment opportunities. You could invest in large multinational corporations that cover all these areas, or in smaller companies specializing in specific segments. Then there's natural gas, a cleaner burning alternative to oil, with increasing demand in the power generation sector. Investments here can range from producers to utility companies and even to exchange-traded funds that track the price of natural gas. Of course, investing in gas and oil isn't without its challenges. Market volatility, environmental concerns, and the transition towards renewable energy sources can impact returns. However, savvy investors can turn these challenges into opportunities. For example, the push towards cleaner energy has spurred growth in the natural gas sector and in companies developing cleaner technologies for oil extraction and usage. Furthermore, the cyclical nature of the oil and gas industry can work in an investor's favor. Buying during a downturn when prices are low and selling when the cycle turns upward can lead to impressive gains. In conclusion, the gas and oil sector, with its diverse opportunities and inherent challenges, offers a compelling investment arena for those willing to delve into its depths. It's a sector where knowledge, patience, and strategy can lead to significant wealth generation. That wraps up our list of 8 assets that can make you rich. Remember, investing is not just about choosing the right assets. It's also about diversifying your portfolio and having the patience to let your investments mature. Wealth building is a test of endurance and strategy. Start investing today and watch your wealth grow tomorrow.